Resurgence of the pandemic has caused serious questions about the path of the U.S. economic recovery. Now, since the beginning, the federal government has instituted massive deficit spending in hopes of taking the edge off the economic slowdown. To put that in perspective, the U.S. national debt has exploded from approximately $23 trillion at the start of the pandemic to almost $29 trillion today. Now, traditionally, huge debt issuance often leads to a steepening yield curve for two reasons. First, the market could interpret it as inflationary policy, making long-term bonds less attractive. Now, longer-term notes and bonds are far more sensitive to inflation because their payment stays the same as inflation makes that amount worth less over time. Now, the longer dated the bond is, the more negatively it's affected by inflation. Secondly, and perhaps more directly, when the U.S. Treasury is the actual dominant seller of treasuries, well, added supply to that naturally weigh on prices due to basic supply-demand functions. Now, since these are not normal times, however, a trader needs to consider counterbalancing the Treasury sales against the Federal Reserve buying huge amounts of the treasuries. The same treasuries that the government is selling, the Fed's buying. Now, if the Fed would decrease that buying, it could greatly reduce the demand component of the equation. In our example today, we're looking at the micro 5-year yield contract priced in simple yield terms. The reason I picked this is because the Federal Reserve buying has been particularly focused around that 5-year maturity. Now, if a trader believes that increased Treasury issuance, perhaps related to the new stimulus talk, is going to push rates higher, a trader could buy that 5-year micro yield at the current 0.79 level and target the March highs of 0.95. Now, a reminder, the micro 5-year contract is $10 per basis point. So that trade, if successful, could make $160. Conversely, if a trader believed that the Fed buying could compress yields, as it's done in the past, a trader could sell that micro 5-year at 0.79 and target January lows around 0.5. Now, if this trade is successful, it could make 29 basis points or $290.